And the same thing. The one that I got didn't have quite 400 on it, but
Yeah, it was just south of that
yeah,
list, whatever. So we're going through it right now and kind of feeding our system, going through our portal, or getting database and moving forward and make an offer. But that tape situation, you have to bid minimum 250, right? You have to have enough to buy for 250.
yeah.
So we're performing. So that's what we have going on in the last week. And right now we're just about, from my coder point of view, from about an hour ago, he updated the pricing on our beginner series that we're coming out with, which is about 20 videos. And then our big calculator, we're just kind of fine tuning some stuff and some coding issues we were having and fixing them to get them launched. Um, you know, anything with you that's any business stuff that's going on with your situation? I know we'll dive into a few things here that we posted in the event page.
Yeah, no, not really. Just it seems like there's been like an uptick of tapes in
Yep,
the last week. So yeah,
absolutely.
I'm kind of the same thing. Working on bids, talking to, some of the investors, making sure things are lined up so they can execute on everything. And
Cool.
yeah, it's actually gotten a little bit busy. Everybody's always talked about how like the end of the year gets busy, and a lot of times it doesn't seem to actually do that. But this year, I don't know if that's the beginning of that actually happening in December or not. We'll have to kind of see. But I've been itching to buy stuff because it's been a little quiet, through most of the year, it seems like, and we've had this kind of mismatch between buyers and sellers where I think we talked
Pricing, yeah.
about this last time. And so I don't know if things are going to start to unlock a little bit. Maybe we'll have to wait and see.
So yeah, we're agreeing that the pricing is just far fetched for, I guess, for the sellers out there. Either they bought wrong or they're just trying to take advantage of the seller's market. Um, I don't
That
know.
happens a lot too. I've seen that before where people can't sell at a decent price because of where they bought and just where they are, and they're kind of stuck. It's not that they really think it will trade at that, but it's like, well, I can't sell this unless I sell it at this high price. Otherwise, I kind of just have to hang on to it.
Yeah.
Working out that happens more often than I originally realized. I've kind of noticed.
It's funny too, because when we first got into it, bidding based on the stair method was the methodology. And sometimes it's based on the seller's basis. Wherever they're in the deal for, they can get rid of it for. Um, so it's interesting to see that kind of play out where prices are getting higher and higher, and they try justifying it. And I don't understand fully why, um, because maybe it's something they know that we don't know. But yeah, I agree. Which actually, one of the questions I saw, Kimberly had posted in one of the groups out there about bidding on an asset that was attached to commercial properties and whatnot, and how to kind of go about that process. Um, and she was questioning about UPB or BPO and whatnot. And it's an interesting conversation to have because I think a lot of people um, like to talk about things, right? We like talking about numbers. We like to talk about what worked and what didn't work and why you priced something the way you did, not for the fact of anything else, but maybe hopefully to learn,
Yeah,
hopefully to
definitely.
kind of
Yeah.
say, listen, that makes sense or doesn't make sense, or whoa, I didn't realize that. And I've done a lot of that in the past year, comparing notes with people to see what maybe I was doing wrong. And I've corrected myself on certain things, you know?
Yeah. Was that Kim Banks Fawcett
Yep.
that was talking about that?
Yeah,
Yeah.
she had a question about, what would you bid on a number? She didn't specify all the information for it, so it's hard for me to
Yeah.
kind of give you details. But um, bidding on a note, I'd like to see more posts in the group, throwing numbers out there. Say, hey guys, what do you think about this deal? I think that interaction is awesome. It's something we should do too ourselves, is post it in the group and see what feedback is. It's a good learning experience for ourselves as well as other people, because some people have different angles than we do, right?
Yeah. And I mean, my pricing models adjust like continuously. It
Yeah.
seems like, when I started, it was interesting. I was, trying to be pretty conservative.
Yep.
The market was loose enough back then. You could kind of still get some stuff here and there. At the same time, though, I had some bad assumptions in the model, right? That's the other thing, is you kind of get more data points. I really brushed up, like I've taken out conservatism in some places, and I put a lot more in other places, like my BPO assumptions.
Yeah.
And, somebody tell me early on, it's like, oh, well, take your 30-day BPO and knock it down by 10%, to be conservative. I'm like, okay, that makes sense. Well, no,
Yeah.
it's like some of these I've sold for like 50% of what my BPO
Yeah.
was going to be, because I didn't realize at the time, if you end up with the property, a lot of times like something's gone wrong.
Yeah, you're right.
And
Not
so,
great condition.
but in other areas I could be more aggressive. There was a tape I could have bought, a fairly big one, last spring, and it was like kind of like right at the edge of my go no go. It was like right inside of it, and I backed off because I felt like it was too close to the edge. But if I knew then what I know now, I would have gone ahead and done it. So it's all over the map. Like in some places, I'm a lot more aggressive than most people in pricing, and in other places, I'm a lot more conservative. It all just kind of
Interesting. I've
depends.
really looked into that for us and see where we lay at that, because ours is still based on returns. I think that depending on the X strategy, what we look at, and we look at the worst case scenario, because I can plan all I want for the borrower to reperform, doesn't mean they're going to. And your great point, the fact that if it does go REO, you're not walking into a freshly painted, house. So just, you have to do some repair. And well, one of the things we changed recently was our repair estimate for properties, where we had a straight flat number. We really didn't have a good guideline of what to figure out. We changed it based on the year built, right? So if the house is built recently, we don't have to expect to have $10,000-$15,000 of repair most of the time. But if the house is built in 1950, I can't estimate 75 $10,000. You need to go higher. And what we found was most people say, well, what if it's a smaller house? Well, I never built a kitchen back for $1,000. You just don't do that, right? Appliances aren't less because the house is smaller. So it's a struggle for us when we estimate these kind of things. But
Yeah, they're a crapshoot. I try to stay away from anything where I know I'm going to have to do rehab work. The few times I've done it, they were just kind of special situations where it made sense. But because you get into, depending on where you are, you have contractor risk as well, right?
yeah,
Like it's risky enough. You're going into the deal, you don't know what rehab you're going to have to do. Then you find out, and the people you hire to do it may or may not perform. So it's
yeah,
like, to me, it's like an extra level of risk
yeah.
piled on that I don't like. Unless it was a place where like I had a crew and I had people I trusted and knew, that would be a
Yeah.
different animal. But
And we've over the years gotten those locations, right? Both of us have our locations that we trust the people in the process, that we have no problem saying, listen, if they're not going to pay, I'm going to take this thing back, and I can easily get this thing, rented or CFD or turn it over to a situation to sell it as is. And you have the buyer's market. One of the things that was also brought up was regarding, on servicing notes, some of the terminology. I know Stephen Burke had mentioned this a while, just over the last week or so. There's a term they had. It was foreclosure bankruptcy fee disbursement, and
okay.
it's hard to tell what that exactly means. But typically, from our experience, when there's a disbursement of bankruptcy fee, there is something to do with the courts, and there was a fee paid to the courts, not typically the attorney. Have you seen foreclosure bankruptcy fee on any of your stuff, and what has it been for
No,
years?
this was from the servicer. So is this maybe I know some of like the what I call like the full service servicers like SN,
Mhm.
sometimes like if they're doing the workout, per their terms, like they take some percentage of the proceeds. I don't know if it was something maybe like that, or if it was actually like a court fee that the servicer advanced. It's hard to say.
Yeah.
I don't really have those with Allied and Madison that I use, so I'm not sure exactly what that would be.
What I wanted to say is that every servicer, like you're cluing into, labels things a little bit different, right? It's not always the same terminology. Uh,
Mhm.
So it's hard to guess what it means, but I'm gonna presume there was some kind of fee attached to bankruptcy. More than likely the court, maybe there was a publication thing, but to use that's different, right? Something to do with it's usually not the attorney fee, it's usually more the legality of the court fees that's brought into there. And I haven't seen that term before, so it depends what service there is. So Stephen, if you're watching, feel free to jump in and put that in there. So this is something that I wasn't too knowledgeable about, but I wanted to bring it up to you and see what your experience was. Is Frank had asked a question, and it was regarding CFDs. Have you ever done a trial CFD where they're not paying and you want to see trial mod, but then turn them over to a full CFD?
Yeah, if I understand correctly, that's something I kind of do all the time, right? So if I have a non-performing CFD and the borrower's there and they want to stay, I try to put some agreement in place, and usually it's got the format of you're asking for some good faith down payment from the borrower so they have some skin in the game, and then some number of trial payments, 6 to 12 usually. And then if they follow through on all that, then I agree to basically reset the loan.
Yep. Like
where the current. Sometimes it can be as simple as just agreeing to change the next due date, or you could modify it. What I really like to do if I can is just say, okay, if you go through this whole plan, we'll tear up the CFD and we'll create a new mortgage, assuming that they qualify to make a Dodd-Frank compliant one. But yeah, you always want to have some trial period in there. I wouldn't go straight from a non-performing loan to agreeing to do a mod, because those trials fail all the time. I've got one guy that's performing now. It's like we're on like the third go of it.
Yeah.
And that's because I'd rather give them a few chances and try to get that to work, because if it works, it's so great, versus going through all the legal process and then maybe having REO and then figuring out if you need to rehab the kitchen and all that other fun stuff. But yeah, trial payment plans are something I definitely use quite a bit.
And I'm sure like you do, there's a ton of different methodologies of doing this thing, right? You can forbearance some stuff. You can do forgiveness of debt. You can do structure where it's like double payments for 2 years. There's all different methodologies, not one way to do it. Is there, without getting into your secret sauce stuff, is there, what have you done, I'm not sure we do, to figure out how much that payment should be and how much to charge that person?
Yeah, I actually did a podcast on this a little while ago. I'll later on when I get into it, I can maybe try to link to it. Where actually, I go into the secret sauce on it. So kind of the structure of it is, at the end of the day, you're kind of taking what you can get to some degree, right? Because you're also dealing with the borrower who may or may not be cooperative. So you can design it however you want. At the end of the day, is what you can implement going to be better than just heading down the legal process? That's kind of what it comes down to. But in a perfect world, you want to get as large of a good faith down payment as you can, because now the borrower has skin in the game, right? The bigger the good faith down payment, the borrower knows if they make this good faith down payment just to appease you for right now and then stop paying, they're going to lose that when you go to legal. So bigger is better.
Yeah.
On the flip side, sometimes borrowers don't have the cash to do it.
You mean they haven't paid for 6-8 months and they're like, I don't have any money. It's like, what'd you do with the money? But you're right, they don't. And no matter what they do.
There's a million situations, right? Like sometimes, they've just been screwing around. Other times they have legit things that have been going on. Maybe they're in the hospital and then they weren't working. It's all sorts of different stuff. But ideally, you want to get the good faith down payment as big as you can. In a contract for deeds, I usually have to get at least $1,000. Sometimes I get like 2,000. Sometimes I've done them with zero, just because it's like, well, we'll give this a try, and if it doesn't work, I'll go legal anyways.
Yeah.
And then the trial payment I usually make, sometimes it's larger than the normal payment. That's ideal if you can do it. or sometimes it's just a regular payment amount. You just want them to demonstrate that they can pay, reliably for some period of time. And then you do your mod at the end, and then, there's a million degrees of freedom on how you restructure this. You can forgive, some of the arrearages potentially, or even some of the balance. I mean, sometimes you can use that if the borrower was interested to leverage a larger good faith down payment.
Yep.
If you could say, hey, dollar for dollar on the good faith down payment, I'll forgive stuff on the back end. So that can be an incentive for them to cough up. There's a lot of degrees of freedom. You don't want to outsmart yourself too much. I mean, the main thing is the borrower even interested in this?
And their ability is a good question, right? Their ability to repay is always something we talk about, and it's hard to figure it out. I mean, at the budget number, and is it something that they're going to be over the threshold? But what we also look into is we're going to resell this thing, right? What we're looking to do is X, Y, Z. So it's a combination of both, right? Knowing the fact that they can repay is something we can't predict, but at the same time, you need to make sure that you're going to make enough profit on the back end that just because it works for them doesn't mean always work for you. We've been in a situation where we just turn the mod down. So listen, it doesn't work. They want a low payment. They want to lower their interest rate from a 5 to 4, and it just doesn't work for us.
Yeah, I don't lower interest rates a whole lot. I mean, what I'll do a lot is stretch the term out.
Okay.
To get the payment where I need it to be. So what I like to do a lot of times, especially when they have those arrearages, so normally you got your unpaid balance. Like, let's say it's, I don't know, $40,000, but they've been behind. So there's like accrued interest and late fees, and maybe the lender paid taxes or something, and maybe your payoff is like 45.
Yep.
As part of that mod, I like to roll those arrearages into the unpaid balance. Because
Gotcha.
when you go to resell that loan, right, everybody's pricing off the unpaid balance, not the payoff amount, which can be higher.
Yeah, absolutely. It could be
If you
that.
can roll the total payoff amount into the unpaid balance, you really can juice the value of the loan. That's one of my favorite.
We had like when we just modded just recently, 54,000 UPB, legal balance now 76. It's just crazy.
Yeah, and you want to be careful about deferring principal, because people do that a lot.
Yep.
That's where you take a part of the principal and you say, okay, we'll put this as like a balloon payment at the end usually.
Yep.
And it's not going to bear interest, because usually when people price loans, even though that deferred principal has value and it's absolutely collectible, most people don't know how to value that, so it can make it a little bit harder.
What most people don't know is most of the time that forbearance amount isn't interest. There's no interest bearing. It's literally a balloon of non-interest payments. So that can stay 10 grand for 30 years, and there's no interest accumulating on that balance. So yeah, and if you do a yield calculation, there is a future value number that you plug into. So you just have to be careful of that. It's a good point, I know Rachel had a question in the groups, was regarding we're just talking about mod, setting a mod and getting no response. We've been through numerous loans where you have a great conversation, you feel good about stuff, and then you get stuck where you send on the paperwork out and the borrower disappears.
Yeah, I've had that happen too. I mean, I get head faked a lot, right?
Yep.
We talk to borrowers. It's just part of the deal.
Yep.
And so, like what I do is I try to do everything I can to get some agreement in place to get this thing reperforming. But at the end of the day, I'm going to go, through the legal process and push it to the wall, right? So, a borrower can buy time by doing that. They can maybe buy like a few months, but I mean, at the end of the day, push is going to come to shove anyhow. And, that's where I get a lot of borrowers. Like, I've had a few that have surprised me where, they just wouldn't cooperate at all, but then you get all the way to the end where they're going to lose the property.
Yep.
And all of a sudden this borrower who couldn't cough up $300 now coughs up like 7,000 and reinstates. And I've had that happen more than once, and it always surprises me when it does. So,
she asked the question, who should send a demand letter? Your servicer, your attorney,
well, it can be either. So typically I have my attorney send them. I like them just to kind of own the whole process. But when I use Allied, like they'll send out demand letters as well.
Yep.
And sometimes I'll send that out, knowing that, okay, I haven't been able to get a hold of the borrower, or, they said they were going to do something and they didn't. Sometimes just sending the demand
Yeah.
brings them back.
Yeah. I mean,
Online.
Bill McCaffrey taught that all the time. He doesn't play around, right? He just sends the mail letter out and a package
Yeah.
out. And I think that to me, that makes a lot of sense. And that's what we do. If I get a loan, I'm not doing door knocks anymore like I used to. I just jump right in. And
Yeah.
go, right? And just get a hold in that way, because the clock starts ticking. You got to get that clock ticking, because some states that could take forever.
Yeah. Especially now where,
Yeah.
it's hard to get court dates,
Yes.
things like that. Yeah. I haven't used as many door knockers. I always keep meaning to do that more. It's like I forget about it or something, but that's not a bad idea too. I know some people have some pretty good processes where they send what's not even really a demand letter. It's just a letter saying, hey, here's what's going on. Here's what we're going to do. Let's talk. And sometimes when somebody shows up and delivers it,
Yep.
that's a little more impactful than just something that, goes in the mail. Usually I just send that stuff in the mail though, just to make it easier on my end.
Yeah. I know that it's interesting, because for us, we typically have used a servicer in the past to send out that information.
Mhm.
But we rather have the attorney send it out now than we did before. It's just something we just find more appropriate, because it's like you're going to get your attorney involved anyway. And if there's something that the um, servicer may not be aware of, it becomes troublesome.
Yeah. And you always want to keep your servicer in the loop when you're
Yep.
starting legal, right? Because a lot of times, like when I use like Franco Barilli for stuff, I just work with him
Yeah.
directly, but you want to let your servicer know what's going on. And then a lot of times you also want to let them know to stop accepting payments, sort of a full reinstatement, right? Because if you
Yeah.
start the full process and then you start accepting payments, that can cause you to start everything all over. And sometimes that helps bring borrowers back online too, right? Where
Right.
a lot of them have been in this mode where, hey, I'll send some money in here and there. I'm never quite going to get online. And then, they get this demand letter and they go, okay, I better send in a few bucks just to kind of keep this rolling. And then the servicer says, no, we're not accepting it. And they're like, wait, what? Huh? Like what? No, I got to fully reinstate it, $6,000. What are you talking about? And then that's where a lot of times my phone rings
Yeah.
directly when that happens.
We've been in a situation where the server's like, no, you can't do that. And my attorney's like, yes, we can. And it becomes a point where it's like, it's frustrating, because you're saying, listen, why am I not going to listen to my attorney who's licensed in that state to handle things? And
Can you explain that? I've never had that disagreement. You're saying that the servicer and the attorney were on different wavelengths as far as what you could do?
yep. And the servicer pushed back on it. And I was like, what do you like? No.
What were they pushing back on? Putting the payments on hold, or?
It was more of what we could do, and I think it was about the accounting of the legal balance.
Okay.
And we're like, listen, we want to put more, and they're like, no, you can't. I'm like, what do you mean you can't? Like, our attorney says we can, we can. Um,
Hmm.
that kind of stuff. You know,
Yeah, I haven't run into that. I've had servicers say, like, once I've sent the demand, like I said, like, well, we're not putting a hold on payments until, you've shown that the demand letter's gone out and things are moving, which is a reasonable ask.
yeah.
But
I see Hassan mentioned a comment about he sends out the NOI that makes more sense than sending a demand letter. I would. The only concern
that's
with
like notice of intent, or is that what that?
yeah, the
Yeah.
only problem with that is I don't know how that affects the clock. And a lot of this time, once you send a demand letter out, you want to start pushing out, even if they call you up to start negotiating things. Until I'm actually collecting financials and looking at stuff, I'm pushing as hard as I can to get that foreclosure legal still going on. Because at the end
Yeah.
of the day, if I can get judgment in hand, it's golden, right? If I can get the judgment and get that piece of paper saying that authority is there, in a default, I can go back to that judgment. I don't got to start back over.
Yeah, that's a good point, right? So if you're going down the legal process and the borrower comes online and says, hey, I want to work out a deal, and then you put a deal in place, you don't actually stop the legal process until the money like hits the
Yes.
servicer and clears. The other
Yes.
thing too is a lot of times people send in checks and they get kicked back for non-sufficient funds.
Yeah.
But sometimes the borrower's like, oh, you need a check for $5,000. I can give you a check, no problem. Here you go. Yeah, you want to make sure everything hits the servicer and, actually clears before you stop anything. Yeah, the rubber has to hit the road before you.
And I get the fact that a lot of people get excited, right? About when they get their deal in and they're like, oh, this is awesome. And at the same time, I get that, but I've been through times where the borrower played around for like 4 or 5 months and you
Mhm.
just, oh, you didn't get the wire. I don't know what happened. Let me go back to the bank. And you're like, oh my God. And there's a point where you say, you know what? I'm done with this game. Boom, we're going forward.
Yeah, you
So
can't take any of that. I take none of that stuff personally. Yeah, that's just part of the way it goes. And really, I kind of don't care what they say. I care what they do, right? Like
yes,
at the end of the day, if they don't do certain things, I'm going to head down the legal process. So I'm going to do what I need to do to get it ready. So yes, I mean, they can buy time by screwing around. And then, once you get to the point, right, where
yep,
if it's somebody, you can't trust them to follow through on what they say, then, you give them, you don't give them benefit of the doubt
no.
anymore. So, I mean, the worst case is if somebody really plays around, they can cost you a few months.
And time
And
is in Ohio, that can be your 15, 16, 18-month process. And indeeded process can be 2 years in a blink of an eye. And at the end of the day, they file bankruptcy and you're on the election, on the, foreclosure auction date, and now you're extending it even more. And it just kills your returns.
yeah, it does. But I mean, I don't mind giving up those few months now and then, because if that helps you get it reperforming, then that's huge. So I'll do everything I can to try to get it reperforming. A lot of these people too, right? They're super disorganized, right? Like I've had a lot of people where they intended to get on track and they just kind of
Yep.
screwed up, and they eventually did. And that couple months of dorking around actually allowed us to get things back on track and get it reperforming.
Yeah.
But it's just part of the deal. I mean, I think of it as a numbers game,
Yep.
right? So, and I just try to be like very nice, but just like very plain. Like,
And we
the
like,
other thing I've had to do too is explain to borrowers, right? I think some of the loans like I buy, they've kind of been passed around a little bit, and a lot of people have the model where they'll buy a non-performing loan, try to work it out. If it doesn't work, they'll just resell it. Maybe take a small loss. And sometimes borrowers get conditioned to expecting that, oh, this guy's just going to give up. If we just run around in circles for a few months. And I have some letters I even send them that just kind of state like nicely but plainly, like, hey, at Fusion Notes, like I realize your loan's been bought and sold, but here's what we do: go out of our way to
yeah.
work with you. But at the end of the day, this is going to get resolved. We're not reselling your loan.
Yeah. And a lot of
Put
people,
that out of your mind.
they get used to that and say, listen, you're going to come and go as well. Well, what you're going to probably sell in the loan in 2 months and I'll be out of it anyway. So why bother responding? You're right.
Yeah.
The mail letter is huge for us. Same mention, I'll see if you see the post that
No, I'm not seeing them for some reason, but
yeah, it's I'll try to send it to you as well, but it's inside the event page as well. But one of the questions was during the foreclosure in PA, his NOI worked real well since legally you can't send a man letter. Now I don't do them most of the cases because it doesn't start the clock. You're right, right? And right now is a different time for a lot of things. There's certain things you can and can't do. Like we talked last week, cash or keys is a really big problem in certain states. So
Mhm.
yeah, I agree with you there, man. Good point. So the next thing that came up that and I tried getting some of these questions that we had about automating your note business. Uh,
Mhm.
and some people there's a bunch of different services out there, and we talked a little bit about this last week. And for us, we have our portal, which we capture all the data for all the different resources we have from, about assets. And then we plug into our big calculator, and then we use spreadsheets and Trello and those kind of facets to automate our stuff. But then we have our email automation as well. not just MailChimp kind of thing, but we also have automation to email attorneys who are in that state and we're looking to bid on an asset. Once we get accepted, it automatically sends an email to them.
Oh, really? That's interesting. I haven't taken it to that degree, but
Yeah. And our bid calculator, which we'll be releasing hopefully in next week, it actually has the servicer and attorneys who are licensed in that state to do business. So if you're looking at an asset and saying, great, I'm gonna buy this asset, and you typically use, say, Madison, then you're in a top spot because sometimes they're not covering in that state. So now you have to hook up with FCI or SN or, Land Home or whatever. So we put that in there because we then automatically say, listen, expect this loan. It goes to, Shantae, and, for Madison or wherever we're at. They expect this loan to be coming in soon. FYI, here's what's happening with the borrower. And it's almost like a summary email right to the servicer, right to our attorney. And it kind of gives them a heads up. And then we can reply back and have that email in our threads. I
haven't gone quite that far with it. I'm more into just tracking like the ones that are in due diligence, just like the process and a checklist of what I've done and things like that. So
your checklist is a spreadsheet, or what's your checklist look like?
So the checklist for that, right? So once I get like an offer accepted, now we just actually turned it into a Google Doc, where it's just got all the steps. And so it's just got all the assets that are in it. And that's where I can keep track of where it is. Like, was the BPO ordered? If so, what date? Or did it come back? What was the results? And then like, if there's anything that needs attention, I kind of put it in red, so I don't forget. And then I put like funding information in there as well.
That sounds similar because we have a checklist for our master checklist. We're buying an asset, and what we have is a column called error or problem, and you put an X in it. And what it does is it filtered out the entire checklist and makes a second tab and says any errors it listen here. So then it filtered out the entire checklist to only the errors. So then we know what to follow up on.
Yeah, and usually I don't have so many going at the same time that it's that challenging. But when I'm in a situation where bids have been accepted but I haven't closed yet,
yep.
Usually just every day I'm going in there,
yes,
and checking and make sure everything's being.
And we pull a lot of our data from our calculator, from our bid calculator, right? It goes from Google Sheets, our checklist, to our bid calculator, which is in Google Sheets, and it pulls in the UPB, pulls in next due date, it pulls all the information right into that same checklist, and then we confirm it against the borrower's, the seller's information as we get it. Go look at the servicing sheet and all that stuff.
Because sometimes they send out tapes and the data was pulled like a few months ago. So by the time you get the loan, the UPB is different because maybe some payments have rolled in. So
yeah, absolutely. You got to make sure that's all accurate. We've been in situations where we've been on a loan and the BPO that was on the seller's tape was the wrong one. They flip-flopped it on the sheet. So when we went to it, we compared our BPO and looked at their BPO in the collateral file, found that it was flip-flop. Well, listen, you had a value of 85 in this thing. It's really worth 50. We're stuck. We're really, we can't really move forward on this deal unless we drop this bid. And they're like, yep, we're sorry, we apologize. But that checklist allows us to flag it and flag that for each asset when we run it through it.
Yeah, and I never put any stock in seller BPOs anyways. That's those like trust but verify things.
Yeah, absolutely. And it's more of a, when we're doing due diligence, if we're getting a situation where our values are showing, solid numbers and the seller BPO is way off, we want to look at that and see what we missed. If they're collaborating with us, it makes sense,
Yeah, the seller's real communicative. That's always a good sign. When they're kind of quiet and be like, just put in offers, it's kind of like, yeah, really anything here or not. Yeah.
So your due diligence process, do you have automation there, or is that manually done to collect information or and to process your bids and track bids and stuff like that?
Yeah, I mean, it's more checklist based than anything. I mean, a lot of this stuff is hard to automate, going through and looking at values, like a lot of that's a manual process. I've got some tools I've built to pull Zillow data using the API. So some of that stuff I can automate a little bit. Some other little tricks to pull, if I'm going through a big list, then pulling links like the Google Maps and stuff like that. But generally, if you're buying like onesies, twosies, you're just kind of going through a lot of that stuff manually. The main thing is though, having a list of knowing what to do so you don't miss
Yeah,
anything and keeping track of where you are, right? Because if you're working on 5 different assets and they're in various states, it's really hard to keep track. I think the big thing is not having to keep track of stuff in your head and having
yeah.
like a step-by-step process to run down. But yeah, I haven't quite figured out like the push button due diligence yet. That would be nice.
Yeah. And with our portal, we found that the Zillow scraper didn't pull everything we wanted to, right? There's a lot of things like if it's been listed for sale. From my knowledge, Zillow doesn't allow that. That's not part of the API, which frustrated us because sometimes
Oh,
that
it
was,
shows last sold instead of, but if you
yeah,
go in manually and look, you can see if it was
absolutely. But we wanted that last listed. So if that thing is listed for sale, we want the price and the date and hopefully the agent.
Yeah, it's weird, right? So people aren't familiar with that. If you go to Zillow, right, there's the data they show on the page for the property, but then you can use what's called their API to do a call like automatically to pull data
Yeah.
on a property.
But not
And
all the
there's some
data.
data, and there's some data you can get using the API that they don't show on the website. And there's other
Ah,
data they put on the website you can't get through the
yeah.
API. So it's kind of weird the way but they actually, if you use the API, you can get like the mid-range Zillow value, which is the Zestimate that they put, but then they also give you like a high and a low.
Yeah.
And that kind of tells you what their level of confidence is. If the high and low are real tight, then usually it's a more like urban market with lots of sales. And you can believe that a little bit more than normal. I never believe Zillow values very much. But
But
sometimes you get these like really big ranges, and that means that they don't really have good data. This number
yeah,
is like
50
pretty much
grand to 300
meaningless.
grand, something to do with one of them, right?
Yeah.
So, so well, Dave, we'll get to your question in just a second. Josh asked, what language do you use for the API? So for our, I mean, for us, we don't use an API. Well, we do. We have a way we don't even pull from Zillow because we have some great sources that we have go through, and we pull a lot of data through our portal at JKP. But from our knowledge, when we used to use the Zillow API, it's a really easy key. You put it in, and you can go through it. There's no fancy language. I guess it's Zillow scraper out there, but it's through Excel.
Yeah, I do it through Excel. So I guess it's just like a VBA code. There's just a macro that runs and pulls it.
Yeah. Um, so one of the questions that Dave McCoy asked about training, um, where would you recommend? I think he asked about going to like note school as well. What's your feeling about trainings? I know you had training when you got in. What's your thought?
Mhm. Right at this moment, I don't really have an awesome place to point people,
Mhm.
to go from like 0 to 1. A lot of those, like note school, I've not done. I mean, I've talked to a lot of people who have. I've heard a lot of good things about it. Um, I've not seen the training, but I know like Kim Banks Foster that we mentioned earlier, she's
Yep.
got Note Investing Academy. I haven't seen her stuff, but I respect her a lot, so it's probably worth looking at. It's a challenge. I mean, I'd say one thing just to be aware of is don't pay like boatloads of money. I keep hearing about these like ultra expensive
Yeah.
masterminds, and I would not go there. And I would just also, if you're gonna take training, tell the person to understand like, okay, what am I gonna learn and what am I gonna be able to go do? Because I've
Yeah.
heard a lot of stories of someone offers some training, they get people all excited and they give them enough to like whet their appetite. And it's
Yeah.
like, oh, well, if you want like the real secret, now you can buy this new thing and that's more expensive. And then they buy that thing. And then they're like, oh, well, if you really want this stuff,
Peter.
it's like, you don't want to be, it's like Charlie Brown trying to kick the football sometimes. So, right. So,
I
so what
like that.
you do, make sure they're very plain about what am I going to be able to go off and do? Am I going to be able to go off and um, filter through assets, put offers in on them, and then know what I'm doing after I get them? Or is it more like rah, 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 here's all the potential of,
Yep.
what you can get. So,
So, you have a training course on due diligence,
mhm.
and it's the step by step of how you do your due diligence. And as we both know, there's multiple ways to do different things, but having that recipe is always helpful. Um, I know people who've gone through Note School, gone through some of the gurus, and there's always a piece missing, right? And I don't blame the trainers for having a piece missing sometimes because they don't cover everything all the time. One of the most common ones we hear is like no one talks about like tape headers, right? And what do they mean and so like that. But I think that
Oh, like the glossary of what this all is.
yeah, like what is next due compared to paid date and the payment string, what's that key mean? And there's a ton of different headers that you and I kind of learn by doing, not really by training, right? Go through and say, oh, that's what this means, or dates on a thing. And some people say, why is there a date and an amount? And you realize that was a payment amount for that month, but there's no real training on that, which is interesting.
Yeah, first on due diligence, I created that because I noticed there were a lot of people who had taken other trainings.
Yes.
They would get stuck on that point. So it's good for, I kind of understand notes, at least a high level. I kind of know what I'm doing. I can bid them, but I want to make sure I can scrub them well. So it's like a real specific thing. The problem with it is if you're somebody who's like, okay, I'm new to notes, I do other stuff, I want to figure this out, I want to wrap my head around it, it's not going to help you with
Yeah.
your business model and bidding, and then it's not going to help you after you go and close somebody. So it's like really specific and highly detailed around like that one step. So it's fairly it's kind of nichey. It's not like A to Z sort of a thing.
Yes, and it's sometimes hard to do all that. It is sometimes hard to get everything into one because not everyone learns the same way as everyone else does. With what we're coming out with for us is we're trying to cover some of the topics that people we've seen post a lot and say, okay, listen, we're going to break down our answer and kind of figure out what will help. And I think what we're trying to do is just kind of, it's not going to be expensive. It's not going to be crazy. It just helped them get over that threshold of being a new investor and just some tidbits here and there. And just to go over things that we feel like, we've heard a lot of questions about mentorships. Like, how do you build that? And that was one of the videos we put in there. What to do in the process of, a lot of questions like, most people don't know what the difference between a mortgage and a mortgage note, a note and a mortgage is. And simple things that people may not want to ask, but we put in the video. So not to say ours is perfect and Dan's is perfect, but just getting in there. But I think Josh put a good point on the event page is reading and doing and networking on Facebook probably taught us the most, I would say.
Oh yeah, there's so much free information out there. I mean, if you put the time in just from going through the various Facebook groups and some of the stuff that's on YouTube, you could put it all together. The problem with it is it's not organized, right? It doesn't
Correct.
like walk you down the trail. There's like tidbits here and tidbits there. And then putting it all together can be kind of overwhelming. So I don't know if anybody's got like a great solution for that.
Yeah.
As of yet. But I mean, I ask questions on those things like all the time because, the other thing too, you got to understand is everybody, like, no matter how long they've done it, is like learning new stuff.
Yeah.
Every day. You never get like all of the information together.
So Patrick asked if we ever heard of Millionaire Maker Coaching Group.
No, I'm not familiar with that.
I've heard of it. There's so many different
Is that for note specific or like real estate in general, maybe?
Patrick, feel free to comment in the thing. I've seen it. I know I've heard of it, but there's so many of those kind of, glamorous groups to make you a millionaire that for me, I've always backed away from that and work with people that I know. And I always tell people, you don't need to connect with somebody that is like, the highest level of, doing 1 million deals a year. You just need to find someone that's like just a step above you to come to connect with, right? And just teach you things that you may not know. I didn't say that
whoever you work with, make sure they're like an operator too, right? Because things change over time. Like I've seen some stuff out there that hasn't been updated in like 5 years.
And a lot of the time is they're we've seen a lot of these coaching methods who the people have been around for like 2 years, 3 years, and not that they can't be good at it, but it's a struggle for me to get into a coaching group that the lead person has been doing it for only a few years. It just you know, every deal is completely different. If you're not in a lot of deals or active for a period of time, even talking to other note investors, you lose the experience, right? Um,
Mhm.
but that's a frustrating I have. So one of the questions, Patrick says it's Notran. I'm not familiar with it, Patrick, but Dave asked about, he has an LLC. Should he
Uh-huh.
have an LLC or wait till he builds a portfolio? I'll admit, my first loan, I bought in my personal name. Um, I wouldn't do that ever again. But the question is, where's that liability, right?
Yeah, and that's a little outside my wheelhouse. I mean, my answer would be to go get an LLC, but I'm not as smart as a lot of other people on business structures and all. That's a little outside my lane. I mean, I know maybe enough to be dangerous with that, so I kind of hesitate to get into that.
Yeah, I'm not giving a legal advice, but I'll
Yeah.
give it from a different perspective. If I'm going to sell a loan to somebody and I'm selling to you and I'm selling to Dan Deppen, and I say, well, what's the company? And you say, it's in my own name. It kind of roughs me the wrong way sometimes. It legitimizes you as a person, and they're not expensive to open. The structure of the LLC, I would definitely talk to your accountant and your attorney to see how to structure it. But you don't need to go run a fund, right? But for
I mean,
buying,
California can be expensive. Like I heard, I think they're like maybe like $800. So it
okay,
kind of depends on the state. Like Colorado's cheap. Um, and I think it's like $50 and like $10 a year or something like that. But some states are kind of prohibitive. So, and the other question is, do you have an IRA? If you're just doing it in your own name, do you want, if you're turning it into a business, then you should probably have an LLC or something else, depending on the situation. Um, if you're just doing it for like savings or whatever, maybe that should be like in a self-directed IRA.
yeah,
Anyhow, just something to think about.
yeah. Patrick, I saw the comment. I'm going to hide it for now just because I don't want to legitimize the coaching. It looks like something you're just trying to promote. So I'm going to hide that just for now because I don't know it and I don't want to advertise on the group here before I get to dive into it and kind of see what it's about. So Josh made a comment about um, LLC. Patrick says something about LLC. I'll tell you ours is LLC. Um,
What I do, yeah.
that's what we're structured in. And I never had a problem with that um, and whatnot. So if you guys have any more questions, feel to jump in. One of the last questions that we had in the event that I saw was Josh asked a question, how do you go from 2 notes to 10 to 30, right? Um,
Um,
and for it's funny because you go one step at a time. I'm glad you didn't ask how do you go from 2 to 100. That's a totally different conversation than go from 2 to 10. But I think that typically when you go from 2 to 10, you're buying a block of 5 assets. You're not buying one. You're typically buying a pool, small thing. Um, what would you suggest if someone wants to jump from there 2 and they have opportunity to get to 10? What would you give advice to say about that?
I mean, I say you need some kind of system in place. Usually like have some kind of CRM. And when it comes to tools, I'm not hard over about like what the tool is. It's more like what you're doing with the tool. So there's a lot of ways to
Mm-hmm.
do it. I use Pipedrive for my CRM, but there's probably 50 other things you could use to make that work. But you need some kind of database.
Mm-hmm.
We've got every note deal in there where you can keep like the pertinent information. What's going on with the taxes, where's it serviced at, what's the situation with the insurance,
Mm-hmm.
some place where you can have notes on it, some place to set reminders and set tasks. So like the big thing is following up on
Yeah.
everything, because you cannot, it happens all the time, right? With, whether it's servicers or attorneys, you have to kind of trust but verify with everything. So you need some kind of tool where you can set those reminders. Like for example, let's say I got a court date next month. I'll set a reminder for the day after that to check in with them and say, hey, what happened? Did it happen? Was it, was it moved to another date, or was there some result? So you need that. And then, some kind of personal,
It's a
you know,
checklist. It's
daily.
an ongoing checklist for your deals,
Mhm.
right?
Yeah, so I use Pipedrive as kind of the main database, and then I use Trello for like my day-to-day stuff.
Yep.
You know, so if there are things that are like super critical to get done that day, you know, I put that in Trello. So I use kind of a combination of tools. There's a lot of ways you can skin the cat. The hard thing when you're new is understanding what to do, because that's the other thing I haven't really seen. Like I've kind of figured it out the hard way. You know, what do I need to do when? So I've kind of broken things down now where like every 6 months, I just order tax reports for the whole portfolio. Because I had one that went to tax sale one time and I didn't know it. They won't necessarily tell you. And you know, I freaked out. I was able to redeem it. I got it taken care of, but you know, it wasn't a big deal. But I'm like, all right, I need a process in place to keep that from happening. So I have some stuff I do like kind of every month or every quarter, and I have those reminders set up. So I just kind of do it. That's the best way to get there.
We have a similar situation. We have it on a spreadsheet, right? And we have a flag that alerts us when we're a month away from a deadline of tax to due. Keep us eye on it. And you know, and getting servicing notes and you know, forced place insurance of like, hey, it flags us when it's 11th month or whatever, you know, it's a 6-month policy, the 5th month, it flags us and lets us know. You know, and those kind of things flags us first. I'm a spreadsheet crazy person, right? And we still got to do our Excel versus Google Sheets one day. I think it'd be great for
Oh
everyone.
yeah.
But I think that, you know, for us, it worked out. So for someone that's going from 2 to 10, do they need these big systems? And I agree with you, they don't.
Yeah, it doesn't have to be a big system. It just needs to be something,
Yeah.
whatever it
And I
is.
think he
You can't
mentioned
keep it in
here,
your head because once you go over a couple,
yeah,
the first couple you can sort of just keep in your head or, you know, do sticky
yeah.
notes, and that kind of quickly becomes impossible.
I know somebody that can, if you mention a loan number, they know the entire deal. Mention a street address, they have no clue you're talking about. How they remember it, I have no clue, but that's how they
Yeah, so
remember.
I always go by street address, which is tough because loan servicers tend to like the numbers.
Yeah, and I get it because numbers typically aren't duplicated, right? Typically, uh,
Yeah.
you know, it's difficult. You know, we worked going by last name until we got to a Smith, and we're in big trouble there. He mentioned about bringing up, starting up, drafting up SOPs, and then hiring a bookkeeper in office. Um, when did you transition from doing bookkeeping yourself and then transition to a person? What was that like for you? For us, it
So
was,
I actually still do the bookkeeping myself
yeah.
because I'm a weirdo, but I enjoy doing that. And I like kind of having my finger on the pulse of exactly everything that's coming in and everything that's coming out. And I can do that really quickly. My dad was an accountant. I grew up around that stuff. So I don't
Ah,
mind doing that. I actually did try to outsource that to somebody
yep.
earlier this year. And it, it was kind of a thing that I really enjoy doing and I get a lot out of it. So I was pretty hesitant to do that. And I didn't want to really spend the money on it if it's something
Yep.
I like. I'd rather spend money on the things that I don't like doing. But I'm
Yeah.
like, well, I'll get this done. And then they raise their prices and I go, okay, I'll deal with it. And then they wanted me to pay for like the part of the year I hadn't used. I said, okay, forget it. I'll just keep it myself. So
Yeah.
I haven't done that. Um, uh, but I do have somebody that works for me, Wendy, who's been just awesome. And we do have a lot of standard operating procedures that I've created. So what I've done is I don't do it with everything, but a lot of times if I'm doing something I don't have an SOP for, I try to like write it down. Okay, here are the steps. Here's where you go. Here are the links. And sometimes they make a quick like couple-minute video. And now Wendy makes her own and fixes them.
Wow.
It's kind of this self-sustaining thing. So if I scale to the point where I need to bring on, you know, additional help, that'll be a lot easier because if you bring somebody on now, you can say, okay,
Boy, I think you
we
should have.
work on this, this, and this, and here are the SOPs, and go at it. So I've got it.
Yeah.
You know,
It's
trying to
awesome.
set it up to scale more. So
It's like
it's a
Wendy's
little
really,
bit.
you know, beneficial. And I would agree with what you're saying. An assistant seems to be more of what you need than a bookkeeper or X, Y, and Z, right?
Yeah, it depends on what you know, right? If bookkeeping is completely alien to you, then getting a bookkeeper is going to make a lot of sense.
Mhm.
But where I find what makes it hard to scale is just all the little stuff that comes up, the back and forth with servicers, attorneys, and you know, letters you get from the cities. It's just kind of like death by cuts. It adds up, especially when you start
Yeah.
feeling. So that's the kind of stuff I look for help with. It's going to be a little bit dependent on your situation and the things that you really like doing and the things that you're good at versus the things you don't like doing and you're not as good at.
Yeah. Yeah, that's the problem, is knowing your strengths is the biggest game changer in this, knowing what you're good at.
Yeah.
I know Josh talked about smart sheets. I'm not familiar with smart sheets, oddly enough. I haven't played with it much.
I've heard of it and I looked at it one time, but now I can't remember what it was. I have come across, I have to go back and look that up again. I don't.
Yeah, you say you can go from a group large task to steps, then you go to the sheet mode for individual tasks. Something probably would help me because I probably have a lot of the fancy craziness, and it probably organize a little better. Josh, appreciate you bringing it up. But I definitely should look into that because between the spreadsheets and Trello and stuff like that, and our proprietary stuff we have going inside, it could get lost sometimes. But interesting. But SOPs, for those who are not familiar, it's just the way you do things, your methodology of processing things, and putting that together is valuable because if you get sick or whatever, you can hand it off task off to somebody else and they can kind of continue it and work it just like you would be there, right? And if you go to have to hire somebody else because you get too big or whatever, the same thing can be handed down. I say the example is, look at McDonald's. You get hired, you're watching a video. I did it when I was like 15, right? And you watch that video, and every beginner does that, and they have an entire process. So you can go from step 0 to at least step 1 of working the job.
Yep.
So cool.
And don't go too bananas with them out the gate, right? I mean, the other thing too is keep them simple. Don't overcomplicate things. And I think that applies whether you're building a spreadsheet or a process. Just try to keep it as simple as possible. And really, I'm talking about me when I say that.
And it's oddly to say this, but I've looked back and had to change some of my stuff over time and go, well, I'm not doing it that way anymore.
My stuff continuously evolves.
Yeah. Cool.
All right.
Well, Dan, this has been a full hour. I didn't expect to be as long. This has been great. Guys, I appreciate everyone jumping into the group event and jumping in. We're going to try doing it again next week. Yes, KISS method. Try to do this again next week, do another event page. And if you have questions, feel free to put in the group, and we'll do our best to answer it during the week, but also we'll put it into the event and answer it live, because it would be a good conversational for guys who may have missed that post or whatever. Yeah, and I know Josh and whatnot. So we definitely want to give some feedback. We want to help you guys out as we do this and kind of branch out and just reach out to more people, hopefully. So Dan, I appreciate you joining me. Hope you guys have a great holiday weekend. And I'm sure we'll be talking soon.
All right. Sounds good. See you later.
Take care, everybody. Thanks a lot.